Good morning, everyone. Welcome to the Macro Snapshot. We are Wednesday, July the 9th, 2025, recording this in the morning. Markets are relatively sort of calm at the moment, not a huge amount of price action, well, apart from copper. And that's just because we haven't had much data. The only sort of news as such, no real geopolitical news, is just the sort of the ongoing sort of situation with tariffs. As we know, the Trump administration has sent out a few sort of letters imposing, we showed that a couple of days ago, showing, the increased tariffs, purported increased tariffs on South Korea, on Japan, etc. But the thing is that none of those have actually come into sort of function yet, and the market is still waiting. There is some reports this morning that there's some kind of framework agreement in the works for the European Union, so it won't be a full sort of trade agreement, and probably will be something cobbled together just to keep Trump happy for a few days. Trump himself was just tweeting saying that apparently today another 7 letters, these famous letters, will be sent out. So at this point, the market seems to be in a wait and see. I think it's waiting to. I think really what the market is trying to tell us is that it doesn't really have final details. It doesn't really believe necessarily that these sort of so-called levels of the Trump administration will be final, and it believes that they'll be negotiated away, and that in fact they only are a negotiating tactic at the moment. And therefore, I think the market doesn't necessarily want to sort of crash or particularly sort of zoom or anything like that. It's simply saying, okay, it's the middle of summer. Trump is throwing out letters. It's a negotiating tactic. This is probably going to be a process which will take weeks and months. And so let's just wait for more economic data. And in the absence of economic data, in the absence of sort of, the Fed or anything like that, that's not much is happening. So as you can see here, we've got the S&P 500, very small range yesterday, just down a little bit, up a little bit today, 19 basis points. Similar kind of situation here for NASDAQ. Still very strong chart. Let's not have the wrong idea. This is still technically a very, very strong chart. So NASDAQ basically up at highs here. Russell not as strong. But nonetheless, the Russell, has broken out of this Fibonacci sort of retracement here, which it had been in. And as you guys can see, the moving averages here are sort of turning over. So now the 20-day up here has crossed over the 50 and the 100. And we're almost getting the 100-day moving average crossing over the 200. So still, quite strong technical charts, even in something like the Russell. If we look at the equal cap RSP ETF, as you can see, not quite at all-time highs, but, pretty strong performance. So at this point, the economy, the market is simply saying the economy is solid, maybe not spectacular, but it's solid. The tax extension, big beautiful bill, which is mildly stimulus, has been passed. Sure, tariffs seem to be coming, but at this point we don't exactly know the final number. And we've lived with this uncertainty for so long that possibly, we can live with an extra sort of % or 2 of tariffs. Maybe. We'll see. Of course, there's another side of the argument essentially saying that, the tariff impact on inflation and the real economy in terms of the labor market and whatnot and spending power hasn't yet been sort of registered in the data. And we're going to see that, as we go into August and September. And that is when maybe, sort of company earnings could start sort of being affected, profit margins and everything. It was interesting. I just saw something yesterday in the small business survey, which was fairly positive. But for the first time, I don't have the chart with me, but I saw it yesterday. But for the first time, in answer to the question of small business owners, what is your major problem? The major problem hasn't been inflation. So that's been the major problem for the last, sort of, I think 24 months or so, is this idea that inflation is the major problem. But yesterday's survey, which we released, the major problem was lack of sales. So that's kind of interesting, because is this starting to sort of show that, sort of maybe the consumer is pulling back a little bit? I mean, that's just one little, not even a data point, it's just a survey. But it is interesting that for the first time in the survey of small business owners across the states, which is quite sensitive, they mentioned that lack of sales was their sort of #1 concern, and they haven't said that for a couple of years. So that is interesting. Okay, so just in terms of other markets, have a quick look around. We had a bond auction yesterday, the 3-year, which tailed by a basis point or so. So not great. And that's to be expected, just as there's quite a bit of uncertainty at the moment about what's happening in the bond market. But if we look over into the US, we can see, let's say the 10-year here, we see the 10-year has fallen off quite a lot, or it's come down quite a lot. Similar kind of situation with the long end. You see here the long end, the ZB has come down a lot. And that's just because, as I was saying yesterday, quite a lot of corporate investment grade issuance. And secondly, just concerned that the Fed is losing its independence from the US from the administration. Essentially, there'll be more bond issuance. There's a lot of factors here. So the long end of the curve just under a little bit of pressure and steepening a little bit. What's going to be interesting in terms of the Fed, if we just look and just see what's priced in, as you can see here from this, just the Bloomberg here, we can see that by the end of December, we're now down to 1.9 sort of cuts. So we've gone down to under 50. So if you remember, recently, a few days ago, we're up to sort of 60, 65. So the market, it's been sort of coalescing around this sort of 50 basis point cuts priced in for the rest of the year for quite a long time now. And what we will do have today at 2 p.m. is the minutes of the last Fed meeting. Normally, that's not going to be too market moving, but it could be interesting just to see the internal dynamics, because it does seem to be emerging that there are two camps within the Fed, those who really think that inflation will be a problem and will make itself felt, and therefore the Fed absolutely, can cut not at all or possibly just once. And then, of course, there are those who actually were appointed by Trump, let's be honest, who are basically saying that inflation hasn't made itself felt, it's not going to be a problem, and now's the time to cut because there are significant weaknesses starting to show in things like the labor market and, surveys and whatnot. We shall see. So we could get a little bit of color at 2 o'clock. And keep in mind that we're coming into the summer sort of period, a little less liquidity. There's no geopolitics going on or no data. So who knows, maybe at 2 p.m. there could be a little bit of volatility just surrounding the FOMC minutes. Just in terms of a couple of other things, we did have the Reserve Bank of New Zealand last night. So if we just look at the Kiwi, the New Zealand dollar, which I will find in a second. They basically were unchanged, which was more or less expected. So you can see here the Kiwi, it's been doing quite well, but it's sort of come off a little bit, but no real sort of change. That was unexpected, as expected for the Reserve Bank of New Zealand to hold. And they did signal that they do expect to cut further, should the data warrant it. So they're still a little bit data dependent. So nothing particularly going on there. Where we did have quite a lot of action, we see, the US dollar continuing to grind. I mean, it doesn't grind higher. I mean, this is a tiny little reaction, nothing significant. As you can see here, sort of stalling out already at the first overhead resistance and the 20-day EMA here. So not a huge amount of upward energy, but nonetheless, just a little technical bounce. But where we did get a lot of action yesterday was in copper. And let's just look at the chart. And this was apparently the biggest one-day move in in sort of history here. So it's interesting that all of my Fibonacci sort of targets, the sort of various sort of measured Fibonacci extensions here, we basically blew through all of those. So that gives me the opportunity to sort of clean up the charts here, so to speak. So here we are with the copper, and you can see here we went up at its height. This on the news. Went up about sort of 1,800 ticks. So the question here, is this news? I mean, what Trump basically announced was, and again, we have to put this into context, that Trump announced a 50% sort of tariff on imports of copper into the US. Now, when we say he announced, this is not a formal document. This is not a law. This has not yet taken effect. This was Trump making possibly a throwaway comment at a sort of a press conference kind of situation, or maybe it was at the cabinet meeting. The point is that it's an off-the-cuff comment which he could reverse tomorrow. But the thing is that under the Section 232, so Section 232, the kind of investigations by the sort of the Commerce Department into specific products and just sort of seeing whether they needed to have tariffs or justified tariffs. And so one of the fears, and one could argue that this led to the buildup of copper price early. And keep in mind when we say copper, this is the high grade traded on the US COMEX exchange, which is not exactly the same as Shanghai or London. And so we've been having this buildup in copper going into the COMEX exchanges. And that was on the idea that Trump would at some point activate, the 232, Section 232 investigation, and there could be a 25% sort of tariff. So yesterday, the fact that he mentioned 50% tariff, that was way above what the market was expecting. Now, will it be instituted? We have no idea. But nonetheless, the market is suddenly going, whoa, a 50% tariff. And keep in mind here, I've got a few charts. Let's just have a look at a few charts here. It is kind of interesting just to see the situation I mean, if you look here, I mean, just look at the demand. I'm just, we all know this, but there is a sort of a structural demand, for AI, hyperscale data centers, electric vehicle adaptation, and the whole infrastructure to charge these things. Industrial reshoring. So if the US wants to bring more industry and industrial capacity back to the US, that's going to require copper. Obviously, we have cloud computing, digital infrastructure expansion, and you could also say that, increased cooling needs, air conditioning needs, heating needs because of, extreme weather and, sort of changing global temperatures. So the point is that we all know that there is a sort of medium-term structural bid for copper. And it's interesting that the US had only actually produces 50% of its needs. So the US, it uses about 7% of global copper. 7% is consumed in the US. But of that 7% of global consumption, the US only produces 50%. So it has to import 50% for its own needs, mainly from South America. So the question really is, if Trump wants to do all this and, reshore in industry and, infrastructure and make America great again and everything, and they need to import 50%. This to me seems a quite, how can I say, an unorthodox, an odd thing to whack a 50% sort of a tariff on it, because what most commentators are saying in the analysis I'm reading this morning is really that this is, there's not really a positive in any sense at all. I mean, this just damages a lot of people and a lot of small industries in the US. Anyway, getting back to the markets, but as I say, I think the market, already we're seeing the outright price on the high grade copper come down a little bit. It's come down 50% since yesterday's spike. We'll see. Trump will probably, end up saying, no, I didn't mean 50%. I actually meant 1%. Who knows? But what is interesting is that, actually, I just want to show you something here. You can look at the copper supplies, and keep in mind that copper is for the future in the futures market is essentially warehoused at the main sort of exchanges around the world for future consumption. So and those ones are the London Metals Exchange in Shanghai, but also at COMEX in New York, so in the States. So what we often trade is the HG, which is the high grade, which of course is traded on COMEX. And you can see here, this is basically the COMEX copper inventory data. And what you can observe here is that actually has been rising and rising quite significantly since March, April. And as you can see here, it's really gone up a lot. And let's just sort of drag this back a little bit just to have a little historical perspective here. So the point is that it's not only yesterday, the inventories at the COMEX exchange have been ramping up a lot. And that's just because traders have been shipping, like literally physically shipping copper into these US-based exchanges with the idea that Trump would, initiate this sort of Section 232 investigation. And there was a high potential for a tariff on imported copper, therefore trying to front run the tariff and eventually even trading and making a profit if the tariff were to be announced, which of course happened yesterday. So that's kind of interesting. But what you can see here, I've got the JP Morgan spread. They put out a chart here between the COMEX London, New York price and the London Metal Exchange. And what you can see, obviously, yesterday, that sort of arbitrage, that differential spiked, well, obviously, dramatically. But it has been sort of going up for the last, 2 or 3 months. Again, it's the same principle that if traders are sort of unnaturally sort of front running demand in the US and shipping demand, that has to come from the Shanghai. You see the stocks in Shanghai exchange are down, and the stocks in the London Metals Exchange are down. And basically all of that physical copper is going into the States. And there's been sort of an arbitrage and a premium basically for HG, for high grade copper. And we can see that, I've got a couple of charts here. We can see that here. So if you look here, you can see the London Metals Exchange price. This is in cents per pound, so it's normalized. You can see in London, it's actually going down yesterday, and it's lagging. It's been lagging the New York COMEX price. You see this differential. So you see here, basically since Trump came in, you can see that the differential has gone out between New York and London based on this idea of the tariffs. So, and then just to sort of finally finish off here, you've got all the warehouse stocks, and you can see here that the London Metals Exchange in the darker blue, you can see how that's kind of going down by comparison with the New York one. So you see the New York one has gone up quite a lot. So the point here is that copper, just getting back to the chart. So what's going to happen here? Where is the chart? So if we get back to the chart here, we can see that, just doing a sort of a basic sort of retracement here. Oh, well, let me get my little fib. We can see that just from the move yesterday, it has retraced about 50% of the move. So I guess at this point, the market is probably going to be waiting sort of further instructions, so to speak, and from Trump and the administration to see whether actually the 50% sort of comes in or not. This is not great, obviously, for sort of non-US producers, but it could be interesting to look at something like Freeport-McMoRan, who are sort of producers of copper within the continental US. What's Freeport-McMoRan? FMC. I'll just put in Freeport-McMoRan. Yeah. So let's have a look at that. And as you can see here, Freeport's also had, which is one of the major copper producers, also, and this in the States, basically had a nice little pop, but already giving quite a lot back. And it might be interesting also to look at Teck Resources, which has some interest there as well. Not really doing much at all. Okay, less involved in the. Maybe I got that wrong with the Teck Resources, but definitely Freeport's popping. So let's keep an eye on the copper market today. Apart from that, not a huge amount going on in terms of the data. I'll just double check, but from memory, I don't think we had any major data points today. We do have the Fed minutes at 2 p.m. and we do have an auction coming up, which will be interesting just to gauge, just as the long end of the bond curve all around the world has been pretty sort of heavy recently, just with this idea that governments are losing sort of fiscal discipline. You know, we saw that in the UK. In the States, there's concerns. We see in certain countries in Europe, they're ramping up infrastructure spending. So the long end of the curve is under pressure. The curve is bull steepening. And so, you know, any auctions are going to be interesting. So let's just have a quick look and see the tenor today. So government auctions. 1 o'clock. Yeah. So we have the 10 years. So let's keep an eye on the 10-year at 1 o'clock and see what happens. And in terms of just general economic data, we just have the minutes at 2 p.m. exactly, where we have some, some other things, wholesale inventories, but that's not really going to be market moving. Okay, guys, I'll leave it there. Have a great day, and we shall keep the conversation going. Thank you.